Coming up on Market to Market. One down and one to go. What Trump's yes to the Republican Party could mean for rural America. And one cattle buyer's quest to build genetics in herds out west. Those stories and market analysis with John Roach next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is the Friday, July 22 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. In what is so far the hottest year on record, the idea of moving to new quarters instead of sprucing up the home place is likely the last thing on most people's minds. However, the numbers show an upward sales trend despite the heat. National Association of Realtors data shows sales of existing homes rose 1.1% last month, the best performance since February 2007. According to the Commerce Department, construction of new places to live grew 4.8% in June. Despite volatility in the financial markets, the index of leading economic indicators rose 0.3% last month. And Wall Street hit a record high midweek after positive dividend reports and the Trump presidential nomination, only to fall off slightly at week's end. Like Trump's acceptance speech, the Dow-DuPont merger is a done deal, if shareholders have anything to say about it. The multi-billion-dollar acquisition is expected to end with the agriculture division split off as its own company. It is unclear if regulators will be giving the final thumbs up. The final thumbs up for president is also in contention. As everyone works for a seat at the political table, Peter Tubbs takes a closer look at what a Trump presidency might mean for rural America.
The Republican Party chose uncharted waters for the presidential election. The GOP-nominated businessman, celebrity, and political outsider Donald Trump for president at their convention in Cleveland, Ohio this week.
Friends, delegates, and fellow Americans, I humbly and gratefully accept your nomination for the presidency of the United States.
What a Trump presidency would mean for agriculture is relatively unknown. Trump has perplexed political experts by revealing few specifics on what policies he would push as president. The only economic issue Trump discusses on his campaign website is trade with China. The candidate advocates an aggressive position with the Chinese, demanding negotiation on intellectual rights protections, the ending of Chinese currency manipulation and export subsidies, and strengthening China's environmental policies. Trump's position on immigration, if adopted, will impact American agriculture. His call for the deportation of the 11 million people residing in the United States illegally, along with dramatically reducing the number of low-wage immigrants coming into the U.S., will affect agribusinesses that depend on low-skill seasonal workforces to harvest crops.
She supported the Trans-Pacific Partnership, which will not only destroy our manufacturing, but it will make America subject to the rulings of foreign governments, and it's not going to happen. I pledge to never sign any trade agreement that hurts our workers or that diminishes our freedom and our independence. We will never, ever sign bad trade deals. America first. Again, America first.
Trump also supports the renewable fuel standard, opposes the Trans-Pacific Partnership, has called for the renegotiation of NAFTA, and believes lowering U.S. corporate tax rates will reduce the offshoring of American jobs.
And we will make America America great again. God bless you and good night. I love you.
Trump is expected to face presumptive Democratic nominee Hillary Clinton in the November 8th election. For Market to Market, I'm Peter Tubbs.
Beauty and profit are not always tied to each other, and the ability to raise a high-quality animal for market is never a guarantee to landing in the black at the end of the year. However, for one of our longtime market analysts who's built a career from the ground up, helping others make top dollar for their labors is all in a day's work. David Miller explains.
In the rough and tumble world of cattle production, it takes a certain type of personality to handle the monetary risks of a volatile market and the often bigger-than-life personalities who buy those animals. From ranchers in the high plains to employees beyond the packing house door, few are able to fill those boots, but Walt Hackney makes the grade. Hackney has spent countless miles on the open road over the past 6 decades, traveling from auction barn to weighing shed, buying millions of cattle from New York to California. He remains one of the few who will purchase feeders for placement, negotiate futures contracts, and sell cattle directly to packers.
I'd like to think that there are others that are as deeply interested in protecting your client base as what I am. And I believe that there are out there doing it. It helps stabilize your market.
The day Hackney graduated from Oklahoma State University, he left for Ottumwa, Iowa, and his new job as a cattle buyer with the John Morrell Company. The trunk of his car was filled with a few pots and pans, some old clothes, and a well-worn saddle.
I had visions of standing on the lower boards of a corral, looking out over a herd of finished cattle, ready for a packer to buy them. Well, it just goes to show you how wrong you can be. That first morning, I signed in at the plant, and they gave me a pair of rubber boots and a fire hose, and they said your first job will be to go out and wash the manure out of the pens, and you keep washing them until you get ready to go home tonight.
After several months of working his way through every aspect of the production line, Hackney was put on the road buying cattle. Over the next few decades, he started a family, became a head cattle buyer for the XL Packing Company, formerly owned by meat industry giant Cargill, and in 1992, he opened Hackney Ag Associates, a full-service cattle buying and forward contracting operation. 25 years ago, while crisscrossing the country, Hackney came upon one of the most significant, single-focused projects he has ever tended, despite the fact it represents only a small sliver of his overall business. High in the Rocky Mountains, ranchers near the town of Colburn, Colorado, were having trouble making a profit on their cattle. The Colburn ranching community pushed Mike Ralston to the front of the pack to ask Hackney, who was buying cattle for National Farmer Feeders at the time, to purchase cattle from a pool of 25 producers.
Actually, I wasn't real sure when I first met him. We weren't, none of us real impressed with him, you know. You had to sort of warm up to him, and maybe he's mellowed out a little bit too, I don't know. But as a person, he's about as honest and straightforward. He gets along with everybody, which is important. What you see is what you get.
Herd size near the town of 700 varies widely from less than 10 to more than 200 head. Hackney brought his life experience to bear on the Colburn pool, and after several years of working with local producers, he has watched the ragtag collection of genetic diversity that varied from paddock to paddock become a single herd of consistent cattle.
You have to be very candid. I say now, we're going to improve on your next calf crop. And we're going to show a better set of calves than what you've delivered in here today, or you're not going to be able to continue in the group. Or you are an excellent example of what we've strived to do in your group. I want to commend you on where you're at.
The people who bought cattle from the pool began to notice the animals looked like they were coming from one rancher instead of a loosely knit group of producers. Word reached another group of cattlemen in Rangeford, Montana. They asked Hackney to take up their cause, and he agreed to lend them his advice. Both programs started attracting the interest of ranchers across cattle country in the Northwest.
I don't have enough time left, and it's too tiring and too much of a challenge to start over again with another new group. Now, if they want to come in and take a lesson off of the existing group, y'all come.
Today, cattlemen in the Colburn Pool continue to feel like they're being treated fairly by the veteran buyer. David Long, a fourth-generation cattle rancher, works with his son and grandson a short distance from the weighing shed.
I just thank the world of the man, the way the whole thing's set up. His crew is just like part of the family after this many years.
After 3 days of weighing and loading trucks, checks are written to pool members in Roland's living room. Thousands of dollars go back into the pockets of Colburn ranchers who are already working on the animals they'll sell next year. Longtime friend Ed Warner clears the cattle through his Albia, Iowa-based Central States Cattle Company.
We've become to know Walt as a very honorable, very honest guy, and very big-hearted, and he is fair with everybody that he deals with. If there's any mistakes or any problems, Walt's probably going to be the one to take the bump.
Farther down the buying chain are producers like Bob Frist of Hubbard, Iowa. On a foggy fall morning, he's taking delivery of 480 head of cattle from the Rangeford, Montana pool. A few years ago, Frist sought out Hackney because he wanted the best cattle available.
It don't cost you any more to feed the good ones than it does the bad ones. Ever since Walt and I have gotten together, he's always did the best he could ever do for me. Not only for the producer out there, he gets the money for the producer, but he also makes us feel like we're getting a good buy on the cattle on this end.
When the cattle are ready in the high country, Hackney will be back in the saddle putting more miles on his car. His rounds will ultimately take him to Colburn, where he can look over the pool and sign a few checks.
Our industry is one of a few that you actually grow about as much in the hard times as you do in the good times. Hard times, you're forced to really wear out a number 2 lead pencil making it work. And so the hard times and the good times thrown together, I wouldn't want to change a thing.
For Market to Market, I'm David Miller.
Okay.
Next, the Market to Market report.
The right mix of weather and excellent crop conditions worked to overpower good export demand as the grain markets finished mixed. For the week, September wheat barely finished in positive territory after losing ground most of the week. The nearby corn contract lost more territory, falling 17 cents. Slower than expected exports and good weather conspired to keep the pressure on August soybeans as the contract fell 66 cents. August meal followed the trend, losing $22.70 per ton. In the softs, December cotton lost $1.60 per hundredweight. Over in the dairy parlor, August Class 3 milk futures gained 27 cents. The livestock sector moved lower as the August cattle contract dropped 97 cents. August feeders lost $2.38, and the July lean hog contract shrank $2.65. In the currency markets, the U.S. dollar index moved 95 points higher. Crude oil lost $2.46 per barrel. Gold retreated $4 per ounce. And the Goldman Sachs Commodity Index lost nearly 11 points to finish the week at 349.50. Here now to lend us his insight on these and other trends is our senior market analyst, John Roach. John, welcome back.
Thanks, Mike. Nice to be here.
Now, you have gotten to travel a little bit of the Corn Belt here over this past week. Give us the 10,000-foot view. What have you seen in your travels?
Excellent crops. Corn and soybeans look just super. A few fields that maybe have a little problem here or there, but not very many. And so these high ratings that the government gives us appears to be continuing today.
All right. So good-looking corn and soybean crop. phenomenal looking wheat crop as we move out farther west, phenomenal harvests. This wheat market, relatively stable on the week or closed, similar to last week. Have we found a bottom in wheat?
I think we have. I think what the market's done is eroded well before we came into harvest, so that as we got into the harvest that we knew that it was a big crop, we could see the kind of yields that were out there, and the market came down and found a bit of a bottom. We're also getting some positive news. The French crop continues to be reduced a little bit. The Argentine crop is expected to be a little bit smaller, so some of the world competition may not be quite as great, but on the other hand, you've got a Russian crop that looks like it's a really big one. So it's not time really to get overly optimistic about the market, but it is time to expect it to bottom and then have some post-harvest recovery.
Okay. Do you expect that post-harvest recovery in the short term, in the next 2 to 3 months, or is this something, if you've got additional bushels that you need to sit on, are you going to have to sit on them for a little while?
I think we have to sit on them for a little while. I mean, when you have wheat piled in the street, it really is an unusual, burdensome supply that really needs to get in under cover. It needs to really get pushed into the marketplace. So it would seem to me it's going to take a little while to get that cleaned up.
All right. Well, now let's take a look at this corn market, 17 cents down. As you mentioned, phenomenal looking crop. We've got a question here from one of our followers on Twitter, and this is from our Canadian friend, Philip Shaw at Agrodome. He's asking, can this U.S. corn crop set a new yield record above 171 bushel per acre? What do you think?
I think it's possible. I mean, we have to have the right kind of weather from here on through the rest of the growing season. But at the moment, we have an excellent crop. It's been very highly rated, really, since the first ratings week, and now we had rains come across in most areas, and we have some drier areas in the eastern part of the belt. But I think there's a real possibility of a record yield this year.
So how do we handle that? I was speaking with some farmers this week in central Iowa. One of them mentioned he still had a number of old crop corn bushels left to sell. Are we going to get a pop, anything to scare this market higher before harvest starts in earnest on the old crop side?
Well, I think the market can have a bounce. I mean, we've had such a precipitous fall that getting a bounce back in the market is to be expected. And I think that on that bounce, you'll want to be a seller of corn. However, if you're looking to be building storage on the farm, if this is something that in your longer term business plan you look and say, you know, we need more storage, this is an excellent year to build the storage, fill it with the corn at these kind of price levels. I think we'll have a good recovery as we move into the spring next year, as we did this year, as we did last year. We had big supplies, but we still had good recovery because of the size of demand and a little bit of worry about crop, and we can have a sharply higher market. People need to understand this size of demand requires big crops year after year after year.
You know, and we've heard in the last week or 10 days, ethanol demand, or demand for ethanol, has been phenomenal. We're seeing folks driving more. Where do you see us going on the export side? Do we have better opportunities as we look out, as you mentioned, into the springtime?
I think so. Remember, one of our biggest competitors is Brazil, and this year the Brazilian second crop was really hurt by hot, dry weather, really throughout almost its entire season. Just a week ago or a week and a half ago, they reduced that crop by 7 million tons. We think it could be reduced a little bit more. The Brazilians have been shipping in the last 10 weeks an average of about 11,000 tons. Very, very small quantity, and they're expected to ship something in the neighborhood of 27 million tons, and they have not had the supplies available to be able to do it. And I think that business will come back to the United States because they simply don't have the grain in order to supply those level of exports.
Okay. Soybeans. From the peak of the soybean rally earlier this summer till Friday's close, we've lost $10 in that August soybean contract, or close to it. Excuse me, $2. Did I say 10? I meant $2. 10 would be, we'd be, I don't know if we'd be on if we lost $10. We lost
it's
$2.
Felt like $10.
It has felt like $10. Same question to you there. Are we getting close to a bottom?
Well, we haven't cleaned the speculative the ownership yet. If you look at it from a fundamental standpoint, we really have longer term positive fundamentals. The carryover numbers that are projected for this upcoming fall, not the fall of 16, but the fall of 17, worldwide will be the smallest that we have seen, actually even a little smaller than 2012 carryover stocks. So we're going to have very tight supplies, and it would seem to me that the market's going to come after those bushels as soon as we find some sort of a bottom. I think what we have now is we have specs selling to users, and that's fine, but one of these days we will turn the market around, and when it starts to recover, we're going to have to come up to whatever farmers want for their soybeans. We have to move up in order to get to the price level they want. Again, the corn exports out of Brazil have been very small. The bean exports out of Brazil have actually been relatively brisk, and the projected total exports, we should be there in 6 to 7 weeks. In other words, they should be sold out of their this year's production in that relatively short period of time. We become the only market in town at that point.
So regardless of what happens with the U.S. dollar, we should still find international buyers for our beans.
Certainly the Chinese have surprised people through the year. The attitude was, well, maybe they were going to back off a little bit on their buying. They didn't back off at all. They're running about 10% above last year's imports. There's talk that, well, they're going to back off next year. But we hear that talk, but we have yet really to see that ever materialize. I think sometimes we hear the talk because it's in their best interest to have us think they don't want more.
Right. Well, let's talk about the cotton market. Phenomenal week last week. This week, we pulled back a little bit, lost $1.60 a hundredweight. What does that tell you in this market? Have we found a new floor here for cotton?
I don't want to go quite that far. I think what happened was we got the July supply-demand reports from the carryover stocks that were coming into this year, the June estimate, to the July estimate for carryover stocks going out into next year. We lost about 10% of the U.S. or the total of the world stocks, and that changes the fundamentals a little bit, and it gave us certainly a big rally in the market. Took us right up into a sell signal. It's the only market I've got a sell signal in, and we've been there for, I think, 6 days. So we're an active seller of cotton at these kind of price levels, because in the final analysis, we still have something over 100 days worth of surplus expected in the United States and 10 months worth of surplus in the world. So we're not into tight supplies at all. We've had a great rally. Take advantage of it if you're a cotton producer.
It's a bird in the hand here, a dime over our range for the past 3 years. Take it.
Look over to the soybean market where you had really tight fundamentals that you said just fell $2. Okay, cotton people want to pay attention to that. They have the opportunity. Don't miss it.
All right. Looking at this livestock market, we continue to see that huge break between the futures and the cash price. When are we going to find a bottom here in live cattle?
Cattle market this week printed the lowest prices in 4 years. There's not much optimism. We saw the cattle on feed report today. It came out pretty much in line with what the trade was looking for, but it's bigger numbers as we go forward, and we need to somewhere or another pick up the demand. And here we are at a time of the year when we might hope for some decent barbecue weather and so forth. I was out yesterday afternoon at my son's house, and we said, do we want to grill steaks? We decided we didn't want to start any fire. And so the demand in this extreme temperature that we've been experiencing across a lot of the country has been hurt because of the temperature.
Do you expect international demand for meat protein to pick up in the next year? Can we find some buyers outside the country?
I think there's certainly an opportunity to do that. It's a lot's going to depend on what economic conditions we have around the world, but we certainly have that opportunity.
All right, feeder cattle. We continue to see that break fall right in line with live cattle. Do we need to see live cattle find a bottom before this feeder cattle market is going to?
Probably. It's amazing that the feeder cattle market's going down with the corn market going down. That's very unusual that you have both of them moving in the same direction.
But you don't see an end in sight here as long as live cattle are so underperforming.
We just made the low in the live cattle this week. So it may be right. It may be the right time, but there's really no indication that we're at that spot yet. There will be some feeder cattle maybe needing to move off of some drier pasture conditions where we have some of that, but otherwise we really don't see that much of a reason to be aggressively buying feeder cattle. Be cautious.
Okay. Lean hog market. That was a market that we've talked about for quite a while, had phenomenal strength. In the past 2-3 weeks, it has really started to break. We haven't seen many positive days in lean hogs. How do we find a new bottom or a new range in this hog market?
Well, we first of all have to get to the peak of slaughter numbers. And this is the time of year, you're not at peak slaughter kind of numbers at all. Those are coming down the road yet. And so we think that the hog market's going to be a tough sled here for another few months. And until we finally can develop get the price where it needs to be and develop the demand to clear the meat supplies.
Okay. We've talked a little bit, you've mentioned global economics as we look for support for the proteins in particular. Where do you see the dollar going? We're coming into summer. Are you in the camp that expects to see an interest rate increase here yet this year?
I wouldn't be surprised that we would get an interest rate increase, but I'm not sure that it's really going to boost the dollar that far. The dollar acts like it has printed a high. We've been in the same broad kind of trading range now for a period of a couple of years, and so maybe we're high enough on the dollar. The situation in Europe with the Brits leaving, that hasn't turned out to be quite as bad as what some of the people thought it might be initially. This week the talk was maybe there's a little more time to make the transitions. So at the moment we're thinking the dollar has somewhat of a cap on it here, and we're not so much worried about that. We think for grain producers particularly, they need to also keep an eye on the Brazilian real, because the Brazilian real slid substantially over a period of a couple of years, which gave them a real advantage. And now here since March, the real has been strengthening, and that slides advantage back to the United States. So the real has a long ways to recover if they can kind of get their act in order, in which case that helps our demand.
Could be a tailwind for U.S. grain producers.
We need something.
John Roach, thank you so much for joining us this week.
Thank you, Mike.
That wraps up the broadcast portion of Market to Market, but John and I will keep the market conversation going, including answering more of your questions during Market Plus, available on our website. And like us on Facebook. You'll find links to some of our videos, and you never know when we might go live for a behind-the-scenes report. And join us again next week when we'll examine how butchers in rural America are working to stay a cut above the rest. So until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company. Offering a full line of grain drying and storage equipment and steel buildings, Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.